Gas prices are rising, banks are tightening the lending standards, and Netflix is cracking down on password sharing. Starting with what's going on with gas prices, you might have noticed that recently gas prices have been trickling back up around closer to the $4 a gallon mark, unless you're in California where gas is always more expensive. But the reason why that's been happening is because of OPEC, the oil producing countries around the world who've been tightening and cutting the supply of oil. So this is something that we started covering about 2 weeks ago or 2 to 3 weeks ago, where we were talking about how OPEC announced a surprise cut in oil production and that this is going to have an impact on oil prices. And now we're really starting to see that hit gas prices. And the reason why this is happening is, well, OPEC made the surprise cut where they were going to cut their production of oil by around 1 million barrels of oil a day. And so you have all this demand for oil, right? People want to drive cars, people are flying planes, people need it for their manufacturing plants and whatever. You have this demand for oil, and then all of a sudden OPEC decides to cut the production of oil, which means you have high demand and you have less supply, which then pushes the price of oil up, which then causes the price of gas to go up. And the reason why this is significant to understand, this is the reason why I've been talking about this oil issue so significantly, is because the price of oil has a big impact on inflation. And the reason why isn't because of oil in our CPI data, but because when gas prices go up, the price of everything goes up, because now you have to spend more money to transport products from place A to place B. When something has to go from the farm to the distribution center to Walmart, and there's a truck that drives it from place A to B, well, the gas for that truck is going to get more expensive, which means that Walmart will have to charge more money for your groceries because the price of the gas to fuel the truck has gone up. This is why oil prices are so important to understand, especially when it comes to inflation, because on one hand, the Federal Reserve Bank is saying that the inflation problem is under control, but then on the second hand, we've been seeing this change in the oil market, which could have an upward impact on inflation, which could make it more stubborn to bring inflation down, which could result in higher interest rates, which could result in a further slowdown in the economy, because higher interest rates cause economic pain. We saw what it did to Silicon Valley Bank. We see what it does when people want to buy a home. Like now, today, April 18th, 2023, we're starting to see mortgage rates go back up closer to the 7% range. But a few weeks ago, mortgage rates dropped back down to around the 6% range. And when mortgage rates dropped to around the 6% range, you saw people flooding the markets to want to buy homes again. And for the first time in, I think it was 7 months, we saw home prices rise. Why did we see home prices rise for the first time in 7 months across the country on average? Well, it was because mortgage rates had a little dip. So people wanted to take advantage of the less expensive mortgage rates. More people started buying homes. The demand for homes started to rise, and that pushed home prices higher. Now, we've been doing this deep dive analysis into the housing market and what's going on with oil in Market Briefs, which is my free financial newsletter, which is why if you have not joined Market Briefs, I highly recommend you do so, because it's an easy and free way for you to stay up to date on what's happening in the markets, from the economy to the housing market to oil to the global economy, and it's super fun to read. We make it super fun and we give away a bunch of fun things too. So if you haven't joined Market Briefs yet, I got the link to how you can join down in the description below. This brings me to what's going on in the banking market, because over the last week or so, we've been seeing a lot of earnings reports by banks, meaning every quarter, a publicly traded bank, a bank on the stock market, has to release their findings and data and financials. And what we've been seeing is a lot of banks have said essentially that they are strong, that the consumer is strong, but that they're seeing consumer delinquencies rise. An article came out on Yahoo Finance today with the title, "More U.S. consumers are falling behind on payments." And the reason why they're saying that consumers are falling behind on payments, well, let me just read you the first line of this article. It is, "Consumers are starting to fall behind on their credit card and loan payments as the economy softens, according to executives at the biggest U.S. banks, although they still say delinquency levels are still modest." So essentially, they looked at some of the biggest banks in the country. They looked at JP Morgan Chase Bank, they looked at Bank of America, they looked at Wells Fargo and Citigroup. And the consensus from the reports and earnings of these four banks is that these four banks are preparing for economic pain. They've all been putting cash aside to protect them against loan delinquencies. And the reason why they need to do that is because these are the banks that are lending money out. And so if somebody's delinquent, well, then that would hurt the bank. So these banks have been putting aside a lot of money, billions of dollars, in order to protect them against delinquencies. In fact, right here we have Wells Fargo, which says that they put aside $1.2 billion in the first quarter of 2023 to protect them against delinquencies. So we're seeing that more and more banks are starting to get worried about an economic slowdown. And in fact, they've also seen delinquencies rise. Why are delinquencies rising? Well, the economy softening. We're seeing that we've had all this high inflation. The high inflation makes it more difficult for people to spend money, because when gas prices rise, when your rent grows, when the price of eggs go up so much, you have less money to go out and spend money on discretionary items. And then in addition to that, the higher interest rates make it less attractive, and it makes it more expensive to spend money. So we're seeing that the big banks, on one hand, they're saying that the economy is strong, but they also see the red flags in the economy, which is why you want to pay attention to what they do, not just what they say. Because interestingly, Bank of America came out and they said how strong the economy is. They said how strong the bank is and why you don't need to worry about anything going on. But at the same time, they announced today that they're going to be laying off 4,000 of their own employees. They've already announced 1,000 layoffs in the first week of April, and they said that they're going to lay off another 3,000 of their own bankers over the next couple of months. Now, it's interesting that they say that, because when Bank of America released their earnings statement, they talked about how healthy their profits are, how healthy their bank is, but they see the red flags, and so they're trying to tighten their costs in order to be proactive and prevent future pains, which is why you're seeing these layoffs with some of the big banks, especially with you're seeing now the delinquencies rise, and you're seeing the different pains happen in the economy. So the banks are trying to get proactive with that. And then to end it off for today, Netflix announced that they're going to be tightening up on password sharing. Now, Netflix is kind of a strange situation, because Netflix really revolutionized the whole way that video streaming has happened. And what they're trying to do is they're trying to stay competitive, because now that Netflix has laid the path to video streaming, many competitors have followed. Hulu, HBO Plus, Disney, ESPN. I mean, they're all out there trying to create video streaming services. And so now Netflix has to stay competitive, not just with the content that they produce, but also with the amount of money that they're making. And they're struggling growing the number of users and keeping the number of users and keeping their profits and revenues high. And so one of the ways that they're doing that, and they have been doing that around the world, is by tightening down on password sharing. Meaning when you share your password with your brother, your girlfriend, your friend, your cousin, whoever, and then they log into Netflix, and they've been able to do that by sharing one account, they want to crack down on that. That way each person has to get their own Netflix account. Now, of course, there's some backlash from this, because some people are saying that screw it, I'm just going to get rid of Netflix and it's not worth it. There's going to be a percentage of people that do that. But next, Netflix's hope and theory is that more people are going to say, okay, fine, you get your own Netflix account and I will get my own Netflix account. That way we can both have an account and watch whatever it is that we want. Now, which way is it going to go? Well, only time will tell. But Netflix has been doing a lot of major changes on the financial side. That way they can continue to compete. Like recently they launched their ad-supported feature, where instead of paying the full price for Netflix, you can pay a reduced price for Netflix, but get some advertisements on the videos that you watch. So interesting to see kind of what's going on in the streaming wars, but I'm gonna go back to the advice that I give. The best ROI that you can get if you're struggling with money is to cancel the Netflix subscription. Not because you're gonna save $15 a month, but because you're gonna save 2 hours a day. And so if you're struggling with your money, cancel the Netflix and use that time to watch something educational. That way you can build that financial education, read a book, work on a business idea, invest in other things, whether it's other businesses, stocks, or real estate. Look for other opportunities. So that's what's going on today. I'll see you all soon.